The markets are in rough shape this week, even after a brief relief rally following Wednesday's lower-than-expected inflation report of 2.8%. Despite that momentary bounce, the downward momentum has resumed, with the S&P 500 wiping out all of its post-election gains. The so-called Trump pump has fully deflated, and the index is now down over 10% from its all-time high. The Trump administration, which largely avoided discussing the stock market in its early months, is now addressing it daily. Officials continue to emphasize their stance that short-term volatility and pain are necessary for long-term gain, expressing confidence that the market will recover in the months ahead. However, with Trump's track record of using the stock market and overall economy as measures of his success, there's no doubt they're feeling the pressure. And for good reason, the damage is becoming impossible to ignore. Take a look at this chart comparing the S&P 500's performance in the first year of Trump's first term versus the first few months of his second term. It's not a pretty picture. Meanwhile, Bitcoin, which saw a sharp sell-off early Monday, briefly plunging to $76,000, has since rebounded and is now consolidating just above $80,000. The big question now: is the Trump administration miscalculating this downturn? Could this turn into a more sustained market slide or even a recession? And if so, would that threaten the Bitcoin bull run, potentially cutting it short once again? Treasury Secretary Scott Bessent addressed this concern on CNBC today when asked about the possibility of a full-blown recession.
You know, when you say that when we're in a period of detox, you used that word on CNBC last week, is that a euphemism for recession?
Not at all. It doesn't have to be, because it'll depend on how quickly the baton gets handed off. You know, our goal is to have a smooth transition. But I tell you, Sarah, the easy thing for us to have done would have been to come in and just keep this massive spending level going. And it's unsustainable. But could we have kept it going for a year, 2 years, maybe even 4? Maybe, but you're risking a financial calamity. So, we are trying to get this tax bill done. We are controlling expenses.
Bessent makes it clear that the Trump administration is attempting what can only be described as a last-ditch, Hail Mary effort to fix an unsustainable economic system teetering on the edge of catastrophe. Most Bitcoiners would likely agree that this is an accurate assessment of the global economy, which has been propped up by the US dollar for over 50 years. This debt-based monetary system has ballooned out of control due to relentless money printing, and it now appears to be nearing its breaking point. Credit where it's due, the Trump administration at least acknowledges this looming reality and is making an effort to confront it head-on, or at the very least, slow the inevitable spiral. Whether they succeed remains to be seen, but even if they do, it would likely only delay the unavoidable. The fundamental truth is that all fiat currencies trend to zero over time, and history has repeatedly shown that every single one has eventually collapsed, only to be replaced by a new system. While cutting government spending through austerity measures and restructuring international trade agreements is seen as Trump's Hail Mary to prevent a systemic collapse, the real Hail Mary is their newly established strategic Bitcoin reserve, even if they don't fully grasp its significance yet. How they choose to manage this reserve will, in my view, determine the future of American economic dominance. Michael Saylor captured this point brilliantly in his recent presentation to the Bitcoin Policy Institute, where he outlined the profound and practical use case for Bitcoin in reshaping the global financial landscape.
What's driving the growth of Bitcoin? It is the most powerful force in the world right now. It's growing nearly 60%. It's become the 8th largest asset in the world. It's about to become the largest asset in the world in the next 48 months. What is it? It's all of the smart money in the world running from risk, running from the past toward the future, from something less secure to something more secure. And they're doing it in the most visible way with their capital. This is a map of the wealth distribution in the world, about $900 trillion. If you break it into uses, half of it is just a store of value. We're preserving our capital for the long term. We just want to keep our money. The other half are assets held for utility. I want to do something with the asset. If you drill into the 450 trillion, you realize the problem is that long-term capital is being dissipated and decimated by fires, by floods, by famines, by tariffs, by wars, by competition, by rust, by obsolescence, you name it, right? What's that cost cost? That costs $10 trillion a year. People go, what is Bitcoin's use case? The use case is to not suffer $10 trillion a year of damage from entropy, from inflation, from chaos, from the future. Bitcoin's an asset without the financial risk of a currency, a bond, a stock, and it doesn't have the physical risk of real estate and property. And we're stripping away the counterparty risk to everything. We're moving away from risk, and what that means is that as the word spreads that there's an opportunity to keep your money without taking risk, long-term capital is being merged into the Bitcoin network. The greatest digital transformation of the 21st century, it isn't the transformation of music, it isn't the transformation of your photos, your communications, your Facebook friends, or educational videos, although each of those things made a $1 trillion company. The greatest digital transformation is the transformation of capital. So it's the transformation of 450 trillion. What's it worth? It's worth half of everything. It's half of everything. That's the transformation.
Saylor goes on to explain that Bitcoin's value appreciation isn't just driven by network effects. It's rooted in something far more profound.
And then, of course, many people say, oh, I get it, it's a network effect. It must be a network. It's not a Metcalfean network. That's just enough information about networks to hurt yourself. It's not getting more powerful with the square of the number of nodes. It's getting more powerful based upon the amount of mass, energy, and capital flowing in the network. It's a Newtonian network, like the solar system. When the white dwarf comes past your planet, it's going to suck the atmosphere off your planet. A white dwarf is not the same as an asteroid the same size. They are different. Bitcoin is the brightest thing in the financial universe. Heat and light. It's the most interesting. It's growing stronger. It's growing hotter. It's growing denser as it draws the capital of the world into its orbit. What capital? Physical capital. People are selling their buildings. Financial capital. They're going to trade out their low-grade bonds, their currencies in third world and the second world. Foreign capital. They're going to sell their Siberian warehouses and their Russian natural gas rights. It's drawing antiquated capital, the capital of the 20th century. It's drawing smart capital. Anybody that thought about it and thought, do I want to be invested in something that's going to decay or be destroyed over time by 100 uncertain risks, or do I want to just keep my money in cyberspace? And then digital capital, right? The AIs, they don't get the bank account. As the economy digitizes, people want to move digital money at the speed of light with 1 million transactions a second. You're not doing it with a Siberian warehouse. You're not doing it with natural gas or gold. You're not going to do it with any 20th century asset.
Saylor then lays out a compelling blueprint for how the United States should implement a Bitcoin strategy to maintain its status as the world's dominant superpower and, in its own words, become the ultimate Bitcoin superpower.
So how should the U.S. pursue a Bitcoin strategy? Senator Lummis has given us a clear guideline with the Bitcoin Act in Nashville in July. It said, let's acquire 1 million Bitcoin over a 5-year period in a programmatic, disciplined fashion, transparent to all. And so let's consider the consequences of this strategy. First of all, last week, the president signed the Strategic Bitcoin Reserve Order. If we hold that 200,000 Bitcoin for the next 20 years, even though you see a flat line on the screen, the flat line is worth $3 trillion. So that's the value of doing nothing. Sometimes people think that you have to do something to make money. Sometimes the absence of doing awful and stupid things is making money. Doing stuff is highly overrated if the stuff is trading or selling your Bitcoin. The Lummis bill would acquire a million Bitcoin or 1.2 million Bitcoin. If you look at the consequences of that over the time frame, it's worth $16 trillion to the nation. If the United States starts to more aggressively stockpile Bitcoin, it's going to accelerate the growth of the network. It's going to accelerate capital flowing in the network. It's going to increase and expand the overall digital capital network. If we move to a triple max strategy, you'll end up with 4 million Bitcoin. That's worth $73 trillion to America. And of course, President Trump has laid out a guideline. We should be the superpower. If you want a superpower strategy, here's a superpower strategy. Acquire Bitcoin consistently. By the way, over what time frame? Consistently daily between now and the point 0.99. 0.99 is January of the year 2035, the point at which 99% of the Bitcoin supply has been mined. The asset becomes effectively capped for all practical purposes because the last 1% comes out over 100 years. 0.99 between now and then you've got 10 years for the digital gold rush. You should get your Bitcoin before there's no more Bitcoin for you. And you can see here, in this strategy, we acquire it consistently, and then we use surpluses from the U.S. government to continue to save in Bitcoin. It's worth $106 trillion to the United States. And so what does that look like? The Lummis plan, which is grand, is modest in some ways, and a modest strategic Bitcoin reserve plan neutralizes the national debt. Sometimes doing modest things are actually brilliant as long as you do the thing. It's like the people that bought just a little bit of Bitcoin in 2012. It was a modest investment. It made them billionaires. A modest thing 20 years in advance is a brilliant thing. If you're more aggressive, the triple max plan negates the national debt. The superpower plan creates a global superpower.
The Trump administration may not realize it yet, but their real Hail Mary isn't cutting government spending through austerity or attempting to rebalance the global economy with trade wars. The true game changer is their strategic Bitcoin reserve, and how they manage it will determine the fate of the American empire for the next century and beyond. But what does this mean for everyday people like you and me? Many understandably see the U.S. Bitcoin Reserve and Saylor's bold strategy as proof that Bitcoin has been captured. However, in reality, nothing about Bitcoin itself has changed. If anything, this only reinforces how crucial it is for individuals, families, and businesses of all sizes to educate themselves and invest in this world-changing technology. At its core, Bitcoin is simple, it's just a more ethical form of money. Most technologies are neutral, meaning they can be used for good or evil. Think of the internet, AI, or even money itself. But Bitcoin is unique in that it has an ethical foundation built into its very design. Its hard-cap supply is virtually immune to manipulation, preventing any single entity from inflating it and stealing value from others. In that sense, Bitcoin resists both human fallibility and corruption. Its digital nature and robust encryption ensure something revolutionary: true ownership. If you control your Bitcoin keys, you own your wealth. No government, bank, or third party can take it from you. It is quite literally codified property rights. In a world where government corruption, financial control, and theft through currency debasement have reached extreme levels, and where the entire debt-based system is facing an inevitable collapse, Bitcoin stands as a beacon of hope. It offers a path for individuals, businesses, and even nation-states to preserve wealth and sovereignty in an era of unprecedented financial uncertainty.